Hi guys, my name is Angela Freeman. I am an IRS enrolled agent and a managing partner here at Freeman CPA, and today I will talk to you about self-employment taxes and help you understand if you're subject to these as a member of an LLC. Alright, so LLC members can be treated as general or limited partners, and typically general partners' distributive share of income, which is box 1 of your K1, is subject to self-employment taxes, while limited partners' distributive share of income is not subject to self-employment taxes. Self-employment taxes are about 15% of your income, so that amount can be quite significant. So how do we determine if someone qualifies as a limited partner not subject to self-employment taxes? Well, first we have to see if we meet the following three-pronged test. All three conditions must be met to qualify as a limited partner under this test. So the first condition is fairly easy to meet. The first condition is the partner has no liability for the LLC debt. So most will meet this test because the LLC by definition is a limited liability company. So by definition, the members of the LLC should not carry liability for their entity. So that's an easy to meet condition for LLCs. Now let's take a look at the second one. You have to perform very little or no work for the LLC. And the IRS defines very little work as less than 500 hours in 1 year. So that's the second test. You'll look to see how much personal involvement you have in the LLC and whether you meet the second prong of the test. Now the third prong is where it gets a little bit trickier. And this is you cannot commit LLCs to contracts. Well, what does that mean? Well, here's the thing. The LLCs come in two varieties. They could be member managed or manager managed. And member managed LLC is the one where every member of the LLC has the ability to commit the LLC to contracts. You can sign on the LLC's behalf. You're a full-fledged owner of this company. And as such, that will disqualify you from being a limited partner under this test. How do you know if you're member managed or manager managed? That's something you can look up in your articles of organization or any amendments to those. You can look to see how were you listed and how were other members listed. And that's something you can also probably look up on your state's website. That's where you can look up how you were treated. But basically the other type of LLC is manager managed, and there you can have one manager or several that have the ability to bind the company on their behalf, and some that are listed as non-manager members. So if that's the case, then the person that is not a manager, they would qualify as long as they meet all three of those conditions. Then they would qualify under this three-prong test, and that's the easy way to determine that they are a limited partner and that their box 1 income is not subject to self-employment taxes. And let's kind of just take a step back and see, well, where does this stem from? Well, before LLCs, there were general partnerships. They're much rarer nowadays because LLCs have become so popular. But in the general partnerships, you have general partners and you have limited partners. General partners are the ones that kind of have the management responsibility. They perform the work, they make the decisions for the business. Limited partners were merely investors. And that's where it's kind of stemming from. If we're looking to see if this person kind of looks like they're just investing in the company, they don't sign contracts, they do no work for the company, they're not liable for the debt, well then they're very similar to a limited partner in a general partnership, and in that case they qualify as a limited partner, not subject to self-employment taxes. Now, there's something known as a Piggy Back rule when it comes to this. So if you have a LLC, multi-member LLC with several members, and if at least one of them qualifies under this test as a limited partner, then there may be other partners that don't qualify by this test, but they may still be able to claim not subject to self-employment tax, even if they're a manager, under the Piggy Back rules. So they still have to meet other qualifications for this, but just the mere presence of being a manager should not disqualify them automatically from being a limited partner because of the Piggy Back rules. So now that we have that, what if you do not meet all three of the above tests? Maybe you do more work, or maybe you can commit the LLC to contracts and you don't qualify under these tests. Well, then we'll look at case law. When we look at case law, we're kind of trying to see, what do you look like? Do you look like you are more of an investor, or do you look like you're more of a business worker, a business runner, somebody who works for the business, somebody who's integral to the running of the business? So if your involvement is limited to simply investing in the LLC, so we see substantial capital contributions from you, very little on day-to-day management, the running of the business, you don't have decision-making ability, you're just there to provide the funds, and then you rely on other members of the LLC to actually carry out the business, well, then you are treated as a limited partner. And your distributive share of income is not subject to SC tax or self-employment tax. Now, if on the other hand, you may have invested something, but that wasn't the main contribution to the business, if you're actually running the entity, involved in daily activities, decision-making, you're signing contracts, you sign the tax returns, well, then you're treated as a general partner, and your Box 1 earnings will be subject to self-employment taxes. So the third part I want to talk about is something we see kind of often, and that has to do with husband and wife partnerships. So when we see two spouses that have decided to form an LLC, and now they have this partnership tax return filing, but in their partnership, they share everything and they kind of got this together, but only one spouse does all the work. So we have a spouse, for example, they formed this LLC, they're both members, they're member managed, so they both can sign contracts, but we have one partner that's the expert. They run the company. The other partner probably has a W-2 job or another business, they do something else. But they're 50% owner, or whatever percentage they agreed on. They're still an owner and a member of the LLC. They can sign contracts, even though the other partner kind of takes care of it. What do we do in that case? Does the non-working spouse have to pick up the self-employment tax just because they're a member of this LLC and they can't sign contracts on the company's behalf? Well, here the answer is it depends. And what it depends on mostly is whether you're located in a community law state, such as California, Arizona, Washington, or if you're in a separate property state. So the majority of states are separate property. There's a handful. They're mostly on the west side of the country, and those states are called community law states. So the IRS has ruled in the case of the community law state is that specifically there, if you have a non-working spouse, because it's a community law state, the spouse that does not perform any work for the entity will still be considered subject to self-employment tax. And what we can infer from that is that if where you live in a separate property state, then the spouse who does no work for the company but happens to be a member of the LLC, we can exclude their income from self-employment taxes. So that's something that we've come across several times with our clients. We looked into that and just wanted to present that to you. I hope that you found this useful, and now you can better understand whether your being member of an LLC subjects you to self-employment taxes. So I hope you like it. If you have any comments, leave them below, and we hope to see you soon again. Take care.